is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Wednesday morning. We're looking at the yen right now. This is, I'm a big fan of trading this from the long side, which means the devaluation of the yen. We're going to get right into it and talk a little bit about some of the things that the Bank of Japan is saying at this stage. I'll just quote it. Negative interest rates, the centerpiece of future monetary easing, promising to weigh further cuts as expansions to its already massive asset buying near their limits, the Nikkei reports. Central Bank adopted the controversial policy in February to hit its 2% inflation target, but the move's unwelcome side effects have been stronger and blah, 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 blah. So, innovative measures may be coming. Again, that was kind of a pain 2 weeks ago. We closed above this 103.52 area and then reverse. That happens sometimes. I was trying to, take some off 103.52, see what happens. Closed above, go back and retest. I myself got stopped out of that trade on the long side. I thought we were just going to kind of follow through there in the break of profiles on the way down on the weekly. But we've ramped up yesterday. Let's see, wait a minute. Today, actually, reached a high of 103.36, so got really close to that weekly unfair high. And then you've got to be looking at, okay, that's your long-term resistance, and we've just got to wait and see. So the guys who have been kind of trying to catch the bid off of these daily unfair lows, which has happened. We talked about that 101.34 area. We've reached some weekly targets. Remember, they take precedence over the dailies. Even though I love the dailies in the 240s, you got to pay attention to Big Mama, the weekly. And got near there, kind of backed off. So, again, a weekly close above that 103.52 is just kind of seal the deal for me again. And looking forward to it, if that can happen. And hello, dinners. The deplorable lot that – I'm just kidding. That's amazing what she said about that. Incredible. It's amazing what both of them say. I mean, the most shocking political scene I've ever experienced. And maybe if you're 100 years old and watching the show, maybe it's the weirdest thing you've experienced in 100 years on the political scene. I've only got half of that area under my belt, but it's weird, to say the least. And in my personal quest for justice at Wells Fargo, I actually went into the bank yesterday, looked around, made a few comments. Some people looked down at their feet as I was making the comments. They know what the deal is. They know what they've done. Again, my personal quest for justice. And the CEO's not resigning. How do you get away with criminal acts like that and not get prosecuted? I mean, if I go fudge a credit card and put somebody else's name on it, and I mean, that's a federal crime, and you go to federal court. Not that I've done that and I'm doing that and saying that from personal experience, but that's a fact. And I don't understand with 5,400 people committing. I don't think they just did it once. So you're talking about quite a few different permutations of numbers on those 5,400 folks. And it happened to me, and I'm like, where's the criminal prosecution for something like that? It's just mind-boggling. But Jamie Dimon did hypnotize everybody at the Department of Justice, and we've talked about that enough. You do the crime, you pay the fine, and you do the math on whether it's worth it to pay the fine and do the crime, because you're not going to get prosecuted. All right, so we'll get back to Thanks for that comment, JB. We'll take that under advisement. The Australian dollar. This is really sickened me. I didn't want to see this thing go this far below the weekly unfair lows, being 74, 78, 79 on the Australian dollar. We're still kind of in the noise area. Now I actually got stopped out of this trade trying to buy the 74, 78s. I don't want to see this thing run away from me. We reached 74.20. Let's see. Let me get this so I can see it. Having a brain problem there. 74.42. So I had my stop around 50. Didn't want to let that run too much against me. So now I've got to wait and see. I'm not a big fan of shorting this. I just want to, today's Wednesday. I'd love to see this thing kind of get back above that area to start looking at it again from the long side. And if it gets stopped out, it gets stopped out again. But I don't want to trade this from the short side. The British pound. If we can get this to come up here. Sailing through support yesterday at 132.53. I got stopped out of this one. I actually thought we were going to kind of explore the higher unfair highs up here at 134.07. Again, dims the brakes. No harm done. You want to keep the risk-reward ratios high. The winning percentage, again, folks, if you're around 50% winning percentage and your risk-reward ratios, 1.5 to 1, I mean, you need to pat yourself on the back. But just, I've got a friend who kind of focuses on how many trades he wins, picks up a lot of, pennies and nickels, and every once in a while gets banged for $1. And that's kind of not the way to play this game. Then your statistics get all out of whack. Let's take a look at the a couple of things on the future side. Get my TFNN clock up here. A couple of things on the future side. This is the November bean trade right now. I just want to point out that we did kind of sail down into this support down here around 944, 945. Why is that important? To really take some off on the short side. You got a chance, really, in my opinion, because of these 240 unfair lows sitting here at 945. You got a chance, in my opinion, to do a little bit of a contra trade up into 951. That's a short list situation in my book. The reason I like this trade, we don't talk about this a lot. Here's the 60-minute. I like this POC on a relatively wide 60-minute near the floor down here, and I like how this thing's kind of spinning around and wanting to stay above here. That's why this 51, 53 area could be hit on the upside and still stay within that long-term trend down. But you definitely have come down into support on the daily. We talked about that being the initial targets, 64 and then 40. Let me just 44. And here's your weekly on November beans. Sailing, not closing yet below 964, but we've reached two sets of targets here on the short from 983. We'll be back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. So we're finishing up with beans, and that's the story here. We've reached some more targets on the downside. This 944 area doesn't have to bounce here, but you got a little bit of a contra trade based on that 240 daily and 60 all lining up around 944, 945, and that POC on the 60 kind of being very close to the unfair lows. And I'm saying all this because you watch this thing over and over and over again for a decade using the same methodology, and you kind of pick up things like, I've seen this movie before. So again, this particular trade will be very short-lived if you're going to do it. You've got some places to play defense here. You're trading against a long-term trend, in my opinion, down. But if you want to play around with a contra trade, got some decent things in your favor here. And if it works out, my PayPal account, I'll give it at the end of the hour. How's that sound? Just kidding. We've got a really cool thing that we developed. We've got a lot of cool things that we developed lately on the programming side. But we've got a signal situation app that's iOS, Android, website, text you, emails, the whole 9 yards. We've been working on for a while. Decent track records for it. Tom and I are going to be talking about this actually today, hopefully for the last meeting on it with Tommy, and I'm really excited to start rolling that out. And it focuses on 6 markets, 6 of the highly watched markets, but we're going to talk about that and do a couple interviews about it. And it's going to be an interesting situation, hopefully for everybody. Oh, wait, okay, so let's take a look at crude really quick, just to cover some of the bases that we normally cover. This is the October contract still. I kind of been more of a fan of crude kind of just slumping off here. Not super interested on buying these support areas, just kind of passing. This is, one we talked about we were going to meet before. Now we're kind of sitting around that area, 44.85 again. What do you do with crude? I just, like yesterday, day before, just not a lot of leverage here. I don't think you've got, any major high probability situation to take advantage of on crude. So it's kind of like a pass to me. Gold, kind of I'm much more interested in being long here, and we kind of passed through that 31-33 area again, and here's where I'm going to feel good about it again, getting back above 33, 31, daily close above. I thought this was going to be a good chance for support again around 33, 31. Sank a little lower than I wanted, so just kind of swimming around here. Gold's probably something just kind of a wait and see in my book. Dollar, very interested in being long this thing. Leverage this week off of that 94.90 area. This is the December contract, and I think we're just going to head higher back up into at least 96.25, 26. We're going to some continuous contracts on some of these futures that we're just going to start just going that route on the treasuries, indices. Some of the currency futures, leave the softs alone, and some of the contracts that really don't have a lot to do with each other. For example, like new crop, whole crop beans. Going to go front month on those, but we should be getting those out pretty quickly. We just got to do some translations in the background to have that jive with the scanner. Okay. Shanghai, talked about this a while, hoping that we would kind of consolidate here and just kind of head north again. We closed just barely below this inflection point today on the weekly. These profiles compressing and getting higher. I'm still a big fan of this bouncing. So right now, kind of within the noise area on the Shanghai, on the index. Oh, let's take a look at the S&Ps. How about that? Here's the continuous on the S&Ps. A lot of volatility right now. No, I don't have to tell you guys that. What do you do with this thing now? There's nothing really hardcore to hang on to down here. Here's the 240s. You've got 21, 28, 29. It's kind of resisting that a little bit right now, but not a lot of leverage here. And as Steve was talking about before yesterday, Steve Banger, just an awesome point of view on many levels from him. Thinks the volatility is probably going to increase, so looking at some option strategies around that for an increase in, I guess, a stay of volatility. 10-year kind of creeping back up a little bit here this morning, but this is the continuous on the 10-year, 129.25. Again, we'll have this in the scanner coming down in support there. The market coming off a little bit and having some increase in volatility. We've talked about the Fed day trading this situation instead of looking at the macro view. So again, that could be something that could rattle their cage a little bit. Silver. I really like this trade. And I like it because we defended this 1861 area. We kind of had the rally. We're kind of beating gold a little bit. And long-term view, I think we're going to head north on silver. Long-term stops below 1860.61. Should we mention natural gas? I think so. All right, so this is the October contract still in natural gas. So this is pretty interesting and exciting, actually, getting back above 28.89, 29.49. So we're passing the weeklies and the dailies now. A weekly close above that's going to be pretty interesting. I know we did that before in reverse, but I like how this thing is kind of edging up, higher lows. Could squeeze some people on the short side here even more so. December corn. Not a big fan of buying this one. I think we could actually go sub 3 on this easily. Technically, it just looks like crap. XLE finally came up below 69.03. Had some people washing out of that. 69.03, 69.02 covering at that point. What do you do with this now? I think oil's just kind of languish here. I don't think you have a lot of edge except selling the weak of the XLE and buying the strong. And there's plenty of opportunities within the scanner for that. Here's the XLV. A couple of stocks we were following in the XLV. I mean, really, showed itself early and came back and retested that 72.84 in the XLV. That's why these inflection points are so important. Let's take a look at a couple of stocks that we were monitoring in the XLV. GILD. Gilead Sciences. This has kind of been the week of this group. And found some kind of downtrend resistance the other day, 78.84. Again, this is what this scanner is for and what these inflection points are for. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I had a question in the den about silver and a little bit of a technical setup here. And the question is, and we were talking about, I just like this trade from the long side. I love how this thing's acting. I love how it really defended that area, 1860, 1870. On the weekly and the daily. As gold kind of continued to sink here, this really got defended pretty well. So the question is, on the daily, just to put it in a nutshell, okay. I'm sorry, in a nutshell, when the POC is just kind of mapped down here on this 1870 area, I failed to mention this. This means basically that this is almost doubling as a support area down here. So I don't want to get people too overzealous about buying silver right now, because then it won't. It'll definitely go down. But 1870, 1860, it's a really, really decent DMZ, as it was before, right in here, for those weekly numbers and the daily numbers. And this basically means that, there's a bigger support area down here, almost double support area. I could go into the math of it, but this is when you see these things happening, just like, when you see, well, we had kind of some breakouts on silver back there. Bottom line, it's basically a stronger support area. RJP, you probably don't have to write that down. And if Tammy's with us, all right, I did not know this, and I feel stupid not knowing this, but talking about Tammy and coffee, I didn't know the longer that they roast a bean, the more caffeine actually kind of exits the bean. So I was always under the impression that the darker roast coffee was somehow, it tastes good to me. I considered it, the espresso, whatever, is almost being kind of a stronger situation all the way around, but it actually extracts more caffeine out of the bean the longer that you roast it. And the darker roast beans, this is not probably a good thing to talk about on the financial show, but kind of intertwines with the morning trading and drinking coffee. Maybe it does have a relationship. But I was floored. I was like, wow, amazing. So now I should drink really weak roasted coffee to get the maximum benefit from the caffeine. Interesting note, possibly. All right, so here we go. Let's take a look at Apple. Look it up. It's a fact, as far as I know. Here we go. So Apple gapped up yesterday and didn't look back. So this doesn't have the pre-market activity on the daily situation here. I still feel like this thing's going to come down, but if you're in some shorts, you got to sit tight now. You got to, it's kind of okay to be long, not okay to be short based on this thing that happened yesterday. So, this thing could run away from us on the upside. You got to always brace yourself that weird things can happen. Ask me and Larry and anybody else on TFNN. It's you got to have the stops in. So right now, this is kind of a wait and see. The long-term weekly still kind of within the balanced area. So the long-term short stop's got to be above 110.23. But right now, that was kind of disturbing that Apple did not come off that 107.41 yesterday morning. And Tammy, that does deserve to be studied, because I heard it on the internet. I'm just kidding. Actually, I heard about it on How It's Made on the Science Channel. And that's a great little channel. All right. Let's take a look at eBay. Something I really don't look at that often, but had an amazing run. And I had an email about this. Is it time to short this? Here's the weekly on eBay. You got the unfair highs at around 31.79. 31.79. So here's the daily. So you got, again, I mean, the stock is not acting bad even after the volatility of the market. You've got 31.79 and actually 31.80 sitting here as the daily unfair lows and the weekly unfair highs. This morning we're trading 31.91. So we've come down into support here. I just don't think you need to be looking at this as a short right now until we get a close below that 31.80, 31.79, and that just hasn't happened yet. And if you're going to pick stocks to try to short, you got better things to put mental capital towards than eBay right now, in my opinion. Even though things that go up, parabolically almost like this thing, and kind of weathering the market volatility storm, can come down as quickly. You've got easier picks on the short side. I hear you. Let's don't put too much science into the coffee thing. So coming in here and looking at the scanner and saying, okay, well, what would those shorts be? What would those layups be? You've got a lot of stocks that have broken down, and this is literally as of yesterday's close on the daily. So I just picked breakdowns here, put some things on the board for you. Let's look at Amazon. Yeah. I mean, that's a scare. Yeah, we talked about that a zillion times. Bristol Myers getting below the dailies again. This is the gift that keeps on giving, folks. Cardinal Health, a lot of the stocks on here. There's quite a few XLV stocks on here. Cardinal Health breaking down again. And there's that, even before the sell-off in the S&Ps, you kind of had that bar set, the stake in the ground on Cardinal Health there. Google, G-O-O-G, starting to break down again. But, if I look at this is kind of showing a breakdown on the daily. You still got some weekly support here, so I would just kind of avoid that. Hewlett-Packard, no, we don't want to mess with that. Johnson & Johnson, yeah, this is one we looked at on the weekly when we started closing below, and then we had a retest there back into 120.54. So, I like how this is acting on the short side. Doesn't deserve to continue to go down, but I like how it's showing relative weakness before that market sell-off. Lowe's Corp, I don't like that. Motorola, these are kind of just profile breakdowns here. I kind of like this, actually. I like being able to play defense on the short side below 76.45 on this one. Philip Morris. We're going to talk about this a little bit when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. Yeah, mass and volume on the coffee. I guess that makes sense. Go figure. Showing a couple things in the den right now. We've got an entirely new HTML5 scanner coming out that's got some really cool heat maps and really kind of a simpler version that's based on dailies only and really is like a step 1, 2, 3 process, shows the trend of the stock and everything else. But we're also converting the current scanner into an HTML5 version. Little, well, get the right things up here. We'll work in a web browser and hopefully on your phones and pads. Just wanted to show you that. All right, so, a couple of things Steve Banger was saying yesterday and the week before, talking about volatility. When you go into this type of environment, sometimes, you can just get shaken out of trades if the volatility's high. So we've talked a lot, and I'm currently personally in a short euro trade with an in-the-money kind of deeper in the money hedge right now on the call side, and it's just something I don't really pay attention to because it's it could go up to the euro could go up to 150 and I wouldn't really care, but I just don't want to miss the move if it happens. And a lot of times on these stocks, like if you're expecting a stock, I'm just picking one out of the blue here, Home Depot to fall like it did and break stride here, and some people having to get out, some funds really starting to cover. A lot of times I think Thinkorswim does a really good job talking about option plays and strategies. So a lot of times this should and could be some of your portfolio, which is kind of longer term option plays, where a lot of the money can be made overnight, but I don't agree with, some of the things Kramer does and gets people into and gets them all pumped up, especially before earnings, or it's a total crapshoot, and doesn't really talk about a strategy. And a lot of times you can play those type of earnings announcements, and it's not like you're going to discover some low volatility play before an earnings announcement, by the way, because that's a known thing. And volatility will increase, but you can kind of, do some option plays to take advantage of some potential moves that you're anticipating, but not really wanting to get shaken out of the trade if you're wrong. So I think Kevin Hinks and that crew does an insane job. You guys don't like Kramer? I just noticed that comment in the den. I thought he was the darling of the Stocktown Crier world. IBM finally breaking down a little bit here. So again, the volatility, but the weekly on IBM still kind of hovering down here. I don't think we've kind of gotten really clean and clear of this particular stock breaking down. So I'm still looking at this as a potential situation to buy. We're just kind of in a noise level on the bottom of the on the IBM unfair lows on the weekly. And remember, those weeklies take precedence over dailies on down the line. We're trading about 155.81 this morning. Or wait a minute. Yes, we're printing now. Yes, and I'll look at copper in 2 seconds here. Lockheed Martin. This one never really retraced back into 249. I really had kind of kept my eye on this. I was hoping that would happen. A lot of times, when you have these breaks and profiles on the weeklies, you'll get that retest, and that's kind of in my mind, the okay to get in the water. Somebody else has kind of figured out the technical pattern for you, and then you're kind of waiting for these retracements up into former support, now resistance. And that just didn't happen. We kept sailing south here. And here's the situation on Lockheed Martin on the daily. So I had an email about this one, and there's not a lot here to trade off of at this stage. Any retracements back up into 242 probably could be sold on Lockheed Martin. Let's take a look at copper. We're looking at the December contract. I was a fan, if you watch the show, I was a fan of trying to buy support on copper around 214.05 on the December contract. So now we just kind of retrace back up into that as we broke down before. The economic, the rates situation, the reaction off of that rate impending crazy quarter-point rate hike, which is freaking everybody out. I don't know if copper's really got a chance to really get long here until we get a weekly close back above 214.05. And right now we're just kind of closing below, finally coming back to resistance. So I'm just not super excited about buying copper yet until we have a confirmation, at least back in the balanced area there. That's my stance on copper. Okay. Sorry, guys. All right. So let's go back into the ETF heat grid here. All of the aggregate profile calculations have now rolled over to negative on our dailies, which is just really wild. And as we go into looking at the the broad S&P breadth calculations, and let's go back to the S&P. What does that mean? To me, 2133 almost has to be sold at this stage based on all the things that we just looked at. The ETFs kind of not cooperating here. The S&P breadth calculations on the weekly and daily are negative. So you got a chance, like Juan was talking about the other day, and we've had some volatility since he was on. I tend to agree with him that you kind of have to sell rallies and sell resistance areas where you can right now in the S&Ps. And that breadth situation that we have in the scanner is kind of putting that on the board for you right now, is it's okay to be in the water on the short side when it's presented. Yeah, we'll look at IBB in just a second, right after the break. And Larry, I didn't see that Wells Fargo CNBC interview, but with the CEO, but I was in the branch yesterday and not screaming, but just kind of saying loudly some things and watching the reactions of the employees. It was interesting. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge show heard daily here at TFNN.com. On Wednesday, September 14th at 5 p.m., I'll be hosting a special 1-hour event, The Ultimate Reversal Patterns. I'll teach subscribers how to identify and trade market tops and bottoms. You'll learn Tom DeMark's TD setup, TD sequential, and TD combo. Plus, I'll show you how to identify Gartley buy and sell patterns, which means you'll learn how to master the D point of any A to B equals CD pattern. More importantly, I'll teach you the most powerful pattern of all, by price relative strength divergent pattern. These patterns work for stocks, for ETFs, future contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes Wednesday's Ultimate Reversal Patterns webinar. This $49 offer is only good through September 14th, so act now. At only $49 for your first month, I guarantee this is an investment that you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. You know I love Wells Fargo. There's a killer bank in North Carolina called First Citizens. That's what I'm moving to. I don't mind saying it. The only reason I didn't move is because the accountant was kind of telling me, don't do it yet. But we're on the launching pad now. All right, let's get back to business. All righty. So taking a look at some stocks, there was quite a few stocks. This is an indicator in itself to me. We looked at the breakdown kind of section. And haven't seen this in a long time. I mean, this many kind of breakdown reds here, especially, after we've had the sell-off and the rally, and now we're kind of having this new wave of heaviness here. So a lot of stocks populate in this area. I'm not a big fan of buying stocks right now. Talked about selling resistance on the index itself. So here's the downtrend resistance scene. Let's take a look at HCA Holdings. That's, not the best short out there. Let's just and this kind of takes into account, have we kind of breached and are rallying back up into some inflection points? Archer Daniels Midland, I have no idea how they'd ever lose money. But if Larry's watching, he might agree with me on that. Only game in town sometimes for farmers. Thank God for Cargill. So, do you take this as a breakdown on ADM? You probably got better shorts out there. This is kind of the weekly, kind of sitting around here around the weekly lows. I don't really like how this is acting on the short side yet. CarMax. This is kind of interesting. Kind of rallying back up into that 56.47 area on KMX. Texas Instruments, Texan. Not a bad little situation here either. 67.73. Yeah. All right. So let's cover a couple of bases before we get off the air here. Going back to some of the things we talked about earlier, the usual suspects, just to recap. Oil, again, kind of selling off more as the show's kind of been on the air here, breaching this 44.85. I'm not a big fan of buying crude. You guys have heard me say that. Kind of just going to swim around here. I don't think you got a ton of leverage either way. Gold, I'm still longish on that, but I want to see it get back above 1331.33. The notes and the bonds, I'm still not convinced that it's time to sell those things. We've reached some targets on November beans down here. Starting to get a little heavy below this 44.45 area, but I think we're still in the game of a contra trade bounce here. But again, the long-term trend we talked about, you got to be looking to sell this thing if we reach that 51.53 area again on beans. Right now, not wanting to really get away from these inflection points down here since we started the show that we talked about 44.45. That's kind of concerning. And again, that's a contra trade against the long-term trend down on beans. Dollar, still looking to buy support on that one when it's offered or buy breakouts. And we're going to take a look at Apple one more time because this thing kind of did a moonshot and stayed above this 107.41. Not time to short it yet. You got a short opportunity at 110.23, and you need to wait until we get back down either also below 107.41 to look at Apple from the short side. Stay tuned for later. You will thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.